Welcome to Mrs. Moneybags Live. This episode is sponsored by quickequity.ca, getting you to your money fast. Nicole Williams, Agent Level 2, and Team Quick Equity are powered by Canadian Tailored Mortgage Solutions license number 13228. Nicole and Team quickequity.ca provide customized mortgage solutions to clients all over Canada. I am your host, Nicole Williams, aka Mrs. Moneybags. We go live Monday through Friday at 11 a.m. to keep you posted on the latest financial developments, market trends, and economic news, helping our viewers make informed decisions about their money. Reminder to do your own research. Our content is intended to be used for informational purposes only, and it's very important to do your own analysis before making any investments and to seek independent financial advice. Let's get into it. Let's start off with our first segment, which is today's mortgage industry headlines. So let's take a look at some of the headlines, the daily news for today. So the summary of mortgage and housing news from across Canada for Thursday, December 21st, 2023. So most mortgage borrowers to see payments rise 34 to 54% versus early 2022. This is according to the Bank of Canada. Let's get into this article. But 34 to 54%, that definitely is steep. And as an agent, we have already seen clients starting to experience these increases. So for clients that may have mortgages that are coming up for renewal, or individuals that are on this live coming up for renewal, type in the comments, is your mortgage coming up for renewal anytime soon? And is this something that concerns you? In the meantime, let's get into the article. So if you had a mortgage since before the Bank of Canada started hiking rates in March of 2022, chances are you will be facing a payment increase before the end of 2025. That's according to a new research report from the Bank of Canada, which estimates that 80% of those borrowers will be subject to a relatively large mortgage payment increase by then. It adds that about 45% of borrowers who had a mortgage prior to March 2022 have already seen their payments increase. Based on current market expectations that interest rates have peaked but will remain above pre-pandemic levels, the Bank of Canada researchers expect that median monthly mortgage payments will rise from $1,200 in February 2022 to $1,600 by the end of 2027, a 34% increase. But as financial markets expect interest rates to begin decreasing in 2024, payments also moderate slightly by the end of 2027. The report reads, however, if interest rates remain at their October 2023 levels for an extended period of time, borrowers would instead face an estimated 44% increase in their payments. Wow, 44% increase. This definitely speaks to a lot of things that I've already started to see and witness within the mortgage space. Many clients are already starting to feel the pinch. Inflation is real. We all already know, we all have already experienced it, whether it be at the gas pumps, in the grocery stores, and now it's hitting our housing by like such enormous amounts. So housing costs will require a lot of individuals to revisit their budgets, to start thinking outside of just, the everyday spend. What are things that you can do to ensure that you're keeping your finances in check? This is what Miss Moneybags Live is all about, helping to give tips, resources on how we can all be prosperous, how we can move forward into the new year with a great footing, not being afraid by headlines that speak to such increases in mortgage payments. Because at the end of the day, as there's increases in this part of our finances, there should also be increase in our finances when it comes to our income and our earning power and the cash flow that we are receiving. Okay, so just keep that in mind. This is real. The headlines are real, but we shouldn't be frightened by the headlines either. Okay, so let's go to one more. Let's read another headline. So Bank of Canada's confidence grows that rates are now high enough, but says inflation risk remain. So let's take a look at this article. So the Bank of Canada's 6-member governing council believes the odds have increased that interest rates are now high enough to bring inflation back to target. That's according to a summary of the council's deliberations from its December 6 monetary policy meeting. Members agreed that the likelihood that monetary policy was sufficiently restrictive to achieve the inflation target had increased. The summary reads, but they also noted that upside inflation risks remain and are therefore not prepared to rule out further hikes. The members agreed that the bank's 475 basis point of rate hikes since March 2022 are continuing to work their way through the economy and are now slowing spending and easing price pressures. With the economy no longer in excessive demand, members agreed they would be watching for signs that the slowdown in the economy was translating into further and sustained easing in inflation, the summary said. However, they cited ongoing concerns about the speed at which inflation was easing. Specifically, they pointed to the 3-month annualized measure of core inflation, which has remained stuck at between 3.5% and 4% from nearly a year. They are also expressed concerns that wages have continued to increase between 4% and 5%. If this were to continue, it would not be consistent with achieving price stability, particularly given weak productivity, the summary reads. As a result, members said they want to see more evidence that both of these indicators are trending in a direction that is consistent with price stability. Okay, so this article was a mouthful, and it basically goes hand in hand with what we are seeing on the mortgage side. It's all about inflation and how the Bank of Canada has been able to tread this inflationary period in which we have been in, specifically around the overnight rate. So they are predicting that we have reached the top end of the rate increases, and so that means hopefully we should now see a pause in that. But they are also letting us know that they are we should keep in mind that should they see a reverse in the trend in which they currently are seeing, that they are not afraid to increase rates further. So really, as expected, we should hopefully start to see, back to that last article, rates start to kind of not necessarily plateau, but get to a steady period where we again have seen some of the higher highs for now. And by the time, of the bulk of a lot of these mortgages that are coming up for renewal in 2024, hopefully we have seen some price stabilization, some stability as far as what rates can be offered, and hopefully we are seeing rates in the 4% again. Again, that is still an increase no matter what and how you slice it, based on just the average rates from the majority of clients that have mortgages coming up for renewal. But again, it does play into the overall aspect of everything and the value of our dollar and just the inflationary pressures that we have been facing in all aspects of the economy. Okay, so we also want to go into the financial tip of the day. So with these two articles and the emphasis on the increased potential in a family's overall spending, especially for families that do hold a larger size mortgage in this economy. We do need to be mindful in our spending, and it's just budgeting, getting back to the basics of budgets, understanding where your money is going, what are your inflows versus your outflows, what are things that you can do to be a little bit wiser with your spending and your discretionary funds. And if there are no discretionary funds, what are things that you're doing to help improve your overall cash flow? Okay, so I hope you are understanding the flow of Miss Moneybags Live and what we are hoping to accomplish. In the comments below, if there is a specific subject that you would like to see us cover for us to discuss, please drop it in the comments below. Again, we love and thank you for all of your support and feedback. This show is for you. It is going to be live so that we can engage with our population and answer any pressing questions that you may have. So any questions that you have for us, drop them in the comments below. We will always get back to them, whether in another show, another segment, or trying our best to respond directly in the comments. So today's Miss Moneybags affirmation is, I am attracting abundance and prosperity into my life. So let's say that 3 times together. I am attracting abundance and prosperity into my life. I am attracting abundance and prosperity into my life. I am attracting abundance and prosperity into my life. And in closing, that is all the time we have for today. Thanks for watching Miss Moneybags Live. Until we see you tomorrow.